If you're a Forex trader, whether you're a beginner or you're an experienced trader, you probably have searched for videos online in regards to moving averages. And in this specific video, I want to give you a complete training on moving average, but not only telling you what they are, but more importantly, tell you how you guys can use this strategy itself so that you can be more profitable in Forex. Hi everyone, this is Christian here on YouTube and welcome to a brand new video for the channel. In today's video, we're gonna talk about moving averages for Forex trading, a complete tutorial for beginners. And this is the only tutorial that you're gonna need in order to start trading with simple strategies for any type of experienced traders. But hey, if you're new to my channel and you're into binary options, Forex trading, crypto trading, or any type of making money online, then this channel is for you. Make sure you hit that subscribe button below. And without further ado, let's jump into the video. All right, so I want to start this video by telling you guys what you guys will learn in the video in total. So I actually divided all of the topics in order for you to understand what is it that you'll learn during this training. And plus there are some time codes in the, what is it called? The play bar where you can actually see what topic we're covering. But pretty much we're going to cover what are moving averages. We're also going to, I'm going to show you how you can go with the trend, how to go against the trend, how to use 3 moving averages that will give you an amazing analysis of the market, plus how you can trade only using 1 moving average and place trades like that, and of course how you can choose the take profit and stop loss level. So at the end of this video, you are able to start placing your own trades. So now let's dive right into the content. So the first thing that you guys have to understand is what are indeed moving averages. And this is a topic that a lot of people don't cover. I mean, you can watch videos in regards to, hey, this is how you use the moving average strategy. Hey, moving strategy this, moving strategy that, but they don't really tell you what are indeed moving averages. So a moving average is basically what the name says, is an average of the movement of the asset. For instance, I'm looking at Bitcoin right now for some reason, but let me just go ahead and show you one of the last trades that I was able to place during this week. So a moving average basically tells you where the price of the asset isn't as an average on the period that you actually choose. So whenever you choose a moving average, for instance, this one is a 200 moving average. So the moving average itself is actually the average price of the last 200 candlesticks. Now, if we want to do it on a easy way, let me go ahead and show you. I change it to a 2 moving average. So the period now is actually 2. So what we see right here is that the price of the moving average is the average of the last 2 candles. Okay, so we can see that, for instance, the price of this one and the price of this one, we actually do the math, right? So we're looking at this one right here, close in this area, and this one closes in this area. Then we divide that into 2 candlestick, and that's going to give us the actual price of the moving average. Just as simple as that. So I show you guys the example with a period of 2, but what happens if it's the period of 5? If you actually add the period of 5, then it's going to give you the price average of the last 5 candlesticks. Okay, that's the way it works. Very simple, right? Now, when you actually take a look at the moving averages that I constantly use, I use the 200, I use the 50, and I use the 20 most of the time. But there's also other moving averages that you can actually use in order to become a profitable trader, which is what I'm going to show you right now. Now, if you don't understand exactly what moving average are, I do recommend you to rewind the video just a little bit and watch it many times as needed so that you fully understand exactly what are moving average. Now, how is it that you actually go with the trend? Look, the higher the period of the moving average, it's obviously going to show you the longer, the more amount of trades or the biggest amount of candlesticks as a period. So basically means that the lower, for instance, give you a 6 moving average, which is something that I've used on the previous strategies. You see that it's pretty much close to the candlesticks because the average is very similar to the actual price that is going on. Whenever you see huge drops like right here, obviously the moving average price is not attached to the candlesticks itself because there was a huge movement on the market. Happened here, happened here, happened here, right? But what happens if you actually change it all the way to 20? So the 20 moving average will give you the average price of the last 20 transactions. Now, whenever you actually see that the 20 transactions are actually on a trend, on an uptrend, for instance, you will realize, of course, that the price is actually going at the same direction of the moving averages, right? That's when you actually see the change on trending, which we're going to talk about in just a little bit. But here, it basically is telling you that the last 20 candlesticks actually showed an upward price, and therefore the 20 moving average is going in that direction. Same thing could happen with the 50 moving average, right? It's even easier to understand. Why? Because the last 50 trades are actually telling you that there is an actual price going up, and the opposite happens right here in the downtrend. You can see that the prices started to drop. Why? Because the last 50 candlesticks, the last 50 hours, it showed that the price was actually going to start dropping, and therefore the price, the moving average is actually going down. Now, that's how you actually go with the trend. Now, going against the trend basically means when you actually are literally going right here and seeing a change on direction of the pair. So the price was actually going up right here and it was an uptrend, and then suddenly it crossed the moving average and it showed you that it was going against the trend. Okay, so how is it that you actually go in about that? For instance, the best moving averages in order to understand the trend is the 50, the 20, the 50, and the 200. But what happens with the 20? The 20, it will help you to do some scalping trades. Why? Because you're gonna realize that the movements are pretty fast. The point of understanding going against the trend is when there's a crossover of the candlestick with the actual moving average. For instance, right here, you can see that there was a cross, but then immediately the prices started dropping. So kind of not the best one, right? If you go to 50 moving average, then you're going to realize that we have a lot more chances to actually go with to understand when there is a change in trending. Like it happened right here, it crossed, but then boom, it continued to drop. And there is no crossover unless this one right here. But if you want to see a really long-term change in trending, that's when you actually use the 200 moving average. Why? The 200 moving average will basically tell you that the price of the previous 200 candlesticks is actually that average, and if it goes below or above that level, that means that the next 200 probably are going to be on the opposite direction, which is what happened right here. And as you can see, the trend continues to go down. So again, to go with the trend, you're going to go with the direction of the actual moving average. And to go against the trend, you're going to go in the crossover of the moving average. You're going to go in the opposite direction. Now, there are three moving averages that I want to show you in this specific video that are to be like the ones that I use the most. And that is the 9, the 50, and the 200 moving average. Now, why is it that these moving averages are so important? Look, the 50 moving average can easily work as a resistance or support level in order to understand when to enter certain trades. For instance, you can see that the price actually touched in by the way, the 50 moving average is the black one. So this one right here, you can see that the price touches and then it bounces back. It touches and then it bounces back. It crosses, but then started bouncing and bouncing and bouncing. And every time it touches the 50 moving average, the price starts to go down. Now, obviously there's a science behind it. And the science is pretty simple. Whenever you see that the price touches, but the moving average, the 9 moving average is not crossing the 50, that basically means that the price will do this and will start retracting and keep on going at the same trending. And the third confirmation is this one, which is the 200 EMA. I'm talking about exponential moving averages right here. You realize that the price hasn't touched the 200 moving average. What happens if it does touch it? Then there is a huge risk that the price will actually change on trending. You can see right here, it touched it once, but then it kept on jumping, but then it's nowhere close to the 200 up until this area. And when this happens, boom, it was an uptrend and suddenly it became a hard downtrend. Okay, so this is a general fundamental analysis that you can actually follow in order to trade with or against the trend. It's really up to you. This is the trade that I actually placed this week. I don't even know where the history is, somewhere right here. Yeah, Euro USD, buy, sell. I don't even know how to show you guys this right here. All right, let me show you directly in my broker somewhere here, my report. There you go. So here are the positions that I actually placed. This is the Euro USD pairs that I've been placing, and my deposit wasn't generated the 21st. And it was actually for $100. Right now, I'm $127. So that basically means that I made 27% increase in my account in 1 week. And what strategy did I use? Only this one. And you can see right here that I also use it on USD CAD. This one I actually lost. I won one and I lost one. And I also placed a trade on AUD USD. Now, I follow the exact same strategy in all of these pairs, okay? And I could have made a lot more profit, but I actually booked my profits first. But this is the combination of the moving averages that I wanted to show you. The 9, the 50, and the 200 are the ones that actually combine. They basically tell you where the trend is actually going. The most important thing that you have to keep in mind is that whenever there is a distance between the 50 and the 200 moving average, the price will continue into that direction. Now, obviously, this is more, how can I put it? It's not 100% guaranteed all the time. But whenever you actually are able to find one of those levels, such as this one right here, for instance, you are in a treat to make a lot of profit right here, okay? Just as an example, let me go ahead and take a look at how many pips, if you enter right here. In total, that was a total of, where is it? I can see it. Oh, 3,899 pips. 3,099 pips. Now, if we actually take a look and place this baby right here, we're talking about almost 4,000 pips. And depending on what price or what stop loss you would have put, which I would have put somewhere around here, we're talking about a 19 risk reward ratio, which brings you around 40% in profit in one single trade. Obviously, these are just examples. It doesn't mean that it always happens like this, but you do get an idea as to what is it that you are targeting when you're trading with this specific strategy. Now, you can only trade using the 200 EMA if you're a complete beginner. But the point of this specific strategy is to have a second confirmation. But if by any chance, what you want is just to trade with one simple moving average, you can do this. Whenever the moving average, the 200 moving average is near, not too far away, but near the 200 right here, the price of the candlesticks are close to the 200, then you can enter certain transactions, for instance, right here. But it doesn't always happen like that. Why? Because there could be a retraction. Let me just go ahead and go back. I don't know, something random so that we see a real example, right? Somewhere around there. So what we're gonna do is that I wanna see exactly, and here's my control bar. I wanna see exactly, for instance, right here, you could say, okay, this is a downtrend, so I can place a sell trade, right? Let's say I place it around right here. Where is it that I saw it? I'm gonna show you right now, of course, how you can place the stop loss and take profit, but just gonna do it randomly right now. So you usually go for 1-to-1. I usually go to 3-to-1. You know, I make 3 times profit. But there you go. You can see now the price is actually dropping, jumping. And yes, it almost touched the stop loss. There you go. Now touch the take profit. Now you can continue like this and you enter another trade whenever there's a crossover. For instance, right here. Whenever there is a crossover, but not this one, but the next one. If you see that the next one opens and closes and it doesn't touch the moving average, there's a huge chance on change on trending. So what you do is that you actually go like this, set the stop loss. Where's the play button? There you go. Boom. It hit the stop loss. Why? It continued going in the opposite direction. Now it started jumping again. Now it dropped and so on. Now, why is it that I'm showing you this and probably do not recommend you to trade with only the 200 moving average? Because there is a combination of analysis that you have to make in order to make sure that the price will either retract or continue in that trend. And that's the reason we need the other 2 moving average. You can use the 50 or you can use, for instance, myself, I use most of the times the 200, 50, and 20. Why? Because when I see this crossover, now I know there might be a huge change on trending. So here, I will, not only the candlesticks, but right here, I see that the 3 moving averages actually change on trending. And now it's actually time to show you how to set the take profit and the stop loss. The take profit is going to be 3 times whatever stop loss that you choose. And the stop loss is actually going to be really slightly outside of the 200 moving average. So if it's a buy position like this one, you're going to put it below the 200 moving average. And if it's a sell position, you're going to put it above the 200 moving average. Okay, now I did it. So therefore, I'm going to select 3.0 as a risk reward. And now I can go ahead and see if my trade goes actually. There you go. Boom. You see, a few hours later, and the take profit was actually hit. Okay, as simple as that. Now, obviously, like I said, this varies. Okay, it doesn't happen all the time, but you do have a lot of potential. This could actually go to 5.0 in risk reward ratio easily, but you can actually be playing around. You can move, do some trailing stop and move around the take profit level, the stop loss level, and it might hit, it might not. Basically, you're playing with the risk right there, but there's a huge chance to actually hit the 5.0 risk reward ratio. There you go. In one trade, you could have made 10% profit. Now let's go ahead and wait for the actual retraction, and then I'm going to show you how to enter the opposite. All right, so you won this trade and so on. You keep on doing the analysis and boom, there you go. You can see that the price. Now here's one cool example. Now you could have entered here for a sell position, but what happens is that the other 50 and 20 moving averages didn't cross. So if they didn't cross, unfortunately, the price has started to retract. So you need to wait for that crossover of those two other moving averages. So we're going to continue. There's a huge uptrend right there. There you go. And boom. Now you can actually risk and enter one position, the short position right here, because there was a crossover. And what do? You put the stop loss a little bit above. Again, this is a very basic strategy. It's not 100% accurate, and it's definitely not for experience. It's more for beginners traders, right? So we're going to see right now. I didn't really look at the previous market in order to show you only the wins, right? So let's see. Now it started dropping because of the crossover. We might lose it, and boom, it hit the take profit again. Another 10% balance into your account. 3,000 pips pretty much, I think. No, it's actually, yeah, 3,000 pips in profit. Okay. Now, this is the way you can actually place trades against the trend pretty much, because you're looking for a change on trending and make huge profits out of it. Again, the stop loss, there's no science in there like how many pips per, no, it's just slightly above the 200 EMA. If you really want to be conservative, you can even put it slightly right here. Obviously your profits are going to be less, but you're going to have less chances to actually lose that trade, and you're still going to make some profit, because right here, for instance, I'm being a little bit more conservative. So my actual stop loss is at 1,000 pips. Obviously I'm looking at a daily chart, but my risk reward ratio went down to 3.0. So if it is at 3.0, that's a 6% increase, but still it's a really good profit. Now, question of the day, what is it that you're using as a moving average, or what strategy are you using with moving averages? Let me know in the comment section below. I want to read you. And hey, if you enjoyed the content of this video, make sure you smash the like button, and as usual, support this YouTube channel by leaving a comment below and recommending this video to anyone that you think that might be interested in it. If you want to see more videos just like this one, make sure you are subscribed to this YouTube channel. Thank you for watching, and I'll see you on the next one.